Hello, everybody, and welcome to this particular session. That is, we are looking at the premium and discount zones, and this is the entry filter that most of the traders ignore. Remember that everything else might have aligned accordingly, but there is also the aspect now of looking whether the zone or your entry is in premium or it's in discount. That is really quite essential for you as a trader to do that. So the reason why we are doing that is so that you can be able to filter and have only high probability trade setups. Okay, because remember there can be so many setups in the market, but you have to filter the setups that you are looking to take, so that now you can be able to minimize, because the more setups you take, you might end up over trading, and then now you end up losing more money. And this is the TFTL education series, and welcome. Let's journey together. The key idea here is that you need to understand that premium means a higher price, a discount means a low price. So, and the reason why we use this, we use it basically to improve the entry positioning. You realize that most of the traders focus on what to trade, but ignore why they are trading. Okay, they focus on what to trade and but ignore why they are trading, and that mistake alone leads to poor entries, even when they have the right ideas. Okay, so why it matters is because it will help you in terms of improving entries, that is a better entries, improved risk to reward ratio, and also avoid buying highs and selling lows. Okay, so probably you might realize that you can have the right direction, the right setup, and still lose money, because I've always said, not once not twice, that a good setup can be a losing setup. Either number one, because the market conditions have changed, nothing you can do about it, or number two, because of your poor execution. All right. So, and in this video, what I'm doing is I'm trying to break down the aspect of or the idea of the premium and discount zones, and show you how to simply filter out the trades that you take, so that now you can be able to improve your trading idea. So this video is basically for people who get the direction right but still lose money, enter too high in buys or too lows in sells, struggle with timing entries, or maybe probably want a cleaner way to filter setups, right? So remember, the key shift, why we are saying why this matters, is that premium and discount, they don't reflect direction, they improve positioning. So they will help you as a trader to improve your positioning, and better positioning means better risk, better entries, and better outcomes. So we have to define the range. Okay, we have to define the range. So when you are using this particular concept, you use the swing highs and swing lows. Okay, so the midpoint divides premium and discount, and I'm going to show you that tool in the chart, so that you can be able to apply it. Or probably you can also use the Fibonacci, 0 to 50 and 50 to 100, those levels. But I'll show you a very precise tool in TradingView that you can be able to use um, to define premium and discount zones. Okay, so the next thing that you need to understand is that if we're in an uptrend, right? If we are looking at an uptrend, it means that we want to buy at discounts. Okay, so as a trader, you need to completely avoid buying in premium, even if there are some buying setups in the premium zone. Okay, maybe probably you are looking at an order block. There is an order block in the premium zone, and you are looking to buy in premium. That is high risk setup. Okay, that is high risk setup. So always look at order blocks, buying bullish order blocks that are always in discount so that you can buy. Okay, so in a downtrend, the rule is that you sell in premium, right? So if you're looking at order blocks for a downtrend, the bearish order blocks, then you want to only consider order blocks that are in premium, because you still get order blocks in discount for sales, bearish order block. So you have to ignore them and focus on order blocks, bearish order blocks in premium, especially if you're looking for sales in a downtrend. And therefore, you have to avoid selling in discount completely, because it might lead you to losing money. Okay, so some of the common mistakes that traders make is using a wrong range. Okay, so you use a wrong range. If you use a long range, therefore you are going to get wrong results. Okay, also never ignore the trend, because most of the traders, they ignore the trend. And again, even if you're talking about buying in discount and selling in premium, you have to confirm other market conditions, especially depending on the setups that you take or the strategy that you use, right? And the other mistake is trying to force trades, right? So avoid completely that aspect of trying to force trade. So the best practices here is for you to combine this aspect with your strategy. So maybe probably you can combine with the liquidity, use the structure confirmation, and therefore you trade with timing. These are things that I've actually been talking about: structure, liquidity, and time. And by now you should be somewhere, of course, understanding that those three ingredients, you have to really factor them before you take a trade: the structure, liquidity, and time. Okay, the time that you're taking the trade. So in summary, what you're saying is that location matters more than direction. So if you're looking for sales, then you need to look at selling in premium. If you're looking for buys, then you need to look at buying in premium, not ignoring the liquidity aspect, not ignoring the timing session, not ignoring the structure. Okay, so because better positioning will give you better results. All right, so let me take you to the charts so that probably you can be able to see the kind of so that you can be able to see the kind of scenario that I'm talking about, so that you can be able to understand what I'm talking about. Okay, so remember what we have said is that premium is equals to high relative. Premium is higher price relative to a range. Discount is low price relative to a range. And to define this, you need a range, and a range you get it through a recent swing high and a recent swing low. Okay, so let's probably push into this 1 hour time frame. All right, so when you come into this 1 hour time frame, this is a swing high, this is a swing low. So for us to define the range, we have to mark from that swing high and that swing low. Okay, so this tool, you will get it here. So let me show you on TradingView. You come here, you see this tool written as range and date and price range. Okay, so then you mark from the swing high all the way to the swing low. What this means is that anything below this mid price here, this middle line here, shows you the 50% range of the 50% level within this range from the swing low to the swing high. So if I'm looking for selling opportunities, definitely I'm not gonna sell in this particular. Anything that is below here is in premium. All right, anything that is below here, sorry, anything that is below that level is in discount. And in discount, what you are looking at is buying opportunities at discount. Okay, so if I'm looking at selling, because again, you see this market is in a very big downtrend, a very strong downtrend, that is. Okay, so you cannot be looking at buying opportunities in a downtrend, because remember we said we want to structure ourselves. Yes, you'll still get buying opportunities or buying setup, right, in a downtrend, but again, the trend is your friend. So when you get those kind of trades, or you're buying in an uptrend, it has to be confirmed. All right, or and maybe probably you're buying in a downtrend, it has to be confirmed with shift in market structure or change of character to confirm to you that now the trend has reversed and we are looking at a bullish trend. So you have to confirm. Okay, so this is the buying zone. But now, because the trend is bearish, what we're gonna do is that now we look for selling opportunities, and we are looking for these selling opportunities above the 50%. So above this level, therefore we are in premium. right? And we said premium is used for selling. Okay, so we are looking at premium for selling because above the midpoint it's premium, below the midpoint it's discounts. Right, this tool is very simple but powerful. Now come to the lower time frame, like the 15 minutes time frame. All right, so what do you see on the 15 minutes time frame? The kind of structure we are seeing here, we are seeing a very bearish structure. So if maybe probably I'm going to illustrate using my trading style. So for me, I will come and see here we have a break of structure, right? A BOS. So I will mark the last order block. I have always explained this. You can look at the various past videos. Actually, last week I did a video about how to mark the order blocks correctly. So I will come there and mark that order block. So for me, I'll be waiting for the price to come to this level. And if you go to 30 minutes time frame, still this level is very powerful. If you go to 1 hour time frame, still this level is relevant. Now, what you are doing there is multi-time frame analysis or correlation. So all the time frames they have to agree. Okay, all the time frames they have to agree. When you come to the 4-hour time frame, you find again it's a very strong bearish engulfing level as well. So it makes it more powerful to wait for the price. When you come to the 5 minutes time frame, what you'll be doing, let me now delete these triangles so that you can see price. What I'll be doing now is trying to minimize the risk. Maybe probably I can now have my order block marked at that particular point. Okay, so at that particular level, basically trying to minimize the risk. Now on the 15 minutes time frame or on the 5 minutes time frame, because this is where we have a very clear BOS. Okay, this is where we have a very clear BOS. Right, so these are BOS, very clear, you can see that. Okay, so but when you look at here also, we are seeing some concentration of some consolidation around this particular zone. Okay, this particular level here. So what it means, this level is above a premium. So on the 5 minutes time frame, we can be able to identify a break of structure, right? A break of structure, and that is a BOS there. So that means this particular level is actually that is an order block. Okay, and it is within the premium, right? So also here we can be able to see this one a BOS, and therefore this one is a bearish order block, meaning that all these points they are valid selling points. The reason why I love trading gold is because once it reaches to these points, higher chances that it's going to react on these levels and give between 50 to 100 pips from my back testing. Okay, from my back testing. So you can see this one is really quite some good number of pips. They're about 300 pips. These levels, that level from here to here. Okay, so that's how I use this tool. But you can see also below here we have these order blocks. All right, so we have an order block here and the market is coming there, so looks like it's gonna sell. But now you have to filter because you can't sell in you can't sell in a discount. The price is so much of a sold. All right, so selling in discount becomes really high risk. Okay, so and again it has to align with different time frames. You can see even when you come to the 15 minutes time frame, this is an order block. On the this is also is another order block, and all these three levels they are in premium, meaning that they are high probability selling zones. So the question maybe probably is, which one do I take, which one do I not take? That is up to you to consider the ones that you're gonna filter, right? But for me, I might show up on both of them, but the one that has the highest probability is this one, which is towards here at the end of this particular zone. Okay, this particular range. So this one is really quite high probability for me. Okay, so if you're taking trades using these other ones here, maybe probably you consider lowering your risk. Okay, you consider lowering your risk. So that's how I'm gonna look at that. So if maybe probably you come to these other, maybe probably let me give another example. Maybe probably in a ranging market. So let's maybe push on the 1 hour time frame, right? So if you look at the 1 hour time frame, we had a range. Okay, we had a range from this all the way down here. So how you mark? You mark from there, right? From that point all the way down to that level, and you can see the price retraced in the mid range. So in this kind of a scenario, actually this is a good example now, so that you avoid the confusions. From this point, what you need to do is, when a level is exactly in the middle of the line, you find that there is an order block. The part of the order block is in discount, the part of the order block is in premium, and maybe you're looking at selling opportunities. That is a 50-50 setup. I don't really regard it. I filter it out, and I don't trade that kind of a setup. Okay, I want a clear setup, right? I want a clear setup. That is my goal as a trader. And now this is the criteria that you use to filter trades, such that you don't find yourself trading each and every setup. Okay, so if you come again here, you see these are swing high, and these are swing low. You mark like that. So you see this price pushed all the way up to the premium level. Okay, it pushed all the way to the premium level, and it actually tapped these particular zone here, that particular order block, right? And gave a very nice selling opportunity. So this is a high probability order block. You can use the same to validate the fair value gaps. The last video I did was about the fair value gap. So also, if you're looking at selling fair value gaps, that is the bearish fair value gap, make sure that they are in premium. If you're talking about the bullish fair value gap, make sure that they are in discount. Okay, so it's a very powerful tool, very simple tool, but very, very, very powerful. All right, so, and again, make sure you comply with the structure, liquidity, and the time. Okay, so because that's really, really important. So thanks everybody, and I look forward toward seeing you the next video. And in the next video, I'll basically be breaking down market structure shift versus the break of structure, and why traders keep confusing them, because understanding this difference is critical for timing entries correctly. So until next one, keep safe.